Okay, so welcome to the latest edition of ABN Cast. You join me here in the ABN Cast studio in London. My name is Lee Hayhurst. I am the editorial director of ABN. And joining me today is Bill Alderman from Alderman and Company. Welcome, Bill. You're over there in the States. Tell me where you
Yes,
are at the
sir.
minute.
Good morning. Okay, good afternoon. Good
Well,
morning, Lee. How are you?
yeah, it's both. So where exactly are you, Bill? Where are you based?
So at the moment, we're down in Washington, D.C. We're attending the big AUSA conference, which is an annual event that's really for the supply chain of and includes the Army procurement folks. I think it's about 20,000 people. It's a 3-day event. So we're down
Okay.
here for that. And there's a bunch of conferences. So today is more of a defense day for us. But
Yeah.
as you know, more than half of our business is commercial aviation. So we're great and glad to be with you.
20,000, that's a big old event. Okay, so
It's a huge event. It's
yeah,
a
a lot of
huge
people.
event.
As you said, you operate in the aerospace and defense, aerospace and defense industry, and you have
Yes.
interesting commercials. So you just tell us quickly what Alderman and Company do. What are you, an M&A specialist in the mid
Sure.
market?
Yeah,
Yeah.
real simple. So we're aerospace and defense M&A people, and we do sell side work.
Okay.
So the analogy I tell to people that aren't experts in Wall Street is we're like someone that brokers real estate. If you want to sell your house or apartment, you would hire a real estate broker. We do that. We sell middle market aerospace and defense companies for owners, usually private owners, but
Right.
also some are small public companies. And that literally is all we've ever done for 23 years, where there's 6 professionals in the firm based in the United States. And we've done deals all over the world. But most of our deals are English speaking. When we're on the defense side, it's obviously just the allies and friends of the United States. Britain is obviously a great ally and friend on the defense side. And on the commercial side as well, we typically do deals English speaking, friends of the United States. And a lot of our work is the US and the Atlantic and not too far away from the United Kingdom or Europe. Obviously, Airbus and its
Yeah.
supply chain is a huge piece of our ecosystem.
Sure. And obviously this year, actually, you've been writing regular comments for us under a City Insider kind of project that we've been doing. So monthly insights, thought leadership into this sector and the M&A trends that you're seeing. So thanks for doing those for us. That's been really interesting to publish on a monthly basis. Look, let's get into it. So look, there's a lot going on at the minute. Probably newsworthy wise, you've been writing stuff about the impact of the issues at the OEMs and supply chain. Obviously, Boeing's one of the biggest around, and Boeing currently has strikes happening in the US as well as at Textron. So I know you
Yes.
wanted to talk about what you think what you feel the impact that will have on M&A activity in the sector. So just tell us about
Yeah.
that, Bill.
Sure, as well. And we're Lee. We've had a great relationship with you now for a while, and my colleague Bruce Andrews has been writing a number of those articles.
Yeah.
And obviously, I get to see what they look like and part of it. But we're happy to be working with you guys. In terms of what we're seeing from that strike at Boeing and also that strike at Textron. Um, and I'll start, Lee, by adding a small piece of non-aerospace defense. Yeah, it was global news, but it was big news in the United States. Our ports were shut down for a few days,
Okay.
and because the port workers went on strike as well. And obviously, we've had inflation across the globe. We've had inflation in the United States. Labor is always, I mean, the textbook, when you open up and you take your first year class in economics, the textbook says labor will be the last to get a price increase because either it's a union, it's a contract, it's an annual raise. Gas prices go up every hour, literally, right? You go to the
Yeah.
gas station and a liter of gas can be more than it was an hour ago. Wages cannot move like that. That's not how wages are priced. So there's always a lag and there's a lot of inflation. So it shouldn't surprise anybody, especially your readers that are intelligent business people, that wages are going to go up and that wages that can't go up quickly, there'll be labor action and strikes. Okay. So
Right.
this is not rocket science.
Yeah.
However, the port strike was big. It was concerning. Both parties came to the table to reach a solution and they moved on. Okay. Um, Textron's still stuck in a strike. That is surprising to me because I think Textron's management, for the most part, is good. They make smart decisions. They're going to have to raise labor rates. There's been inflation. Their labor's getting paid less than they used to on a real dollar basis or on a real pound basis. And they've got to fix it. Textron, I'm not that worried about. They
Yeah.
will fix their business.
But,
Go ahead.
but for listeners who don't know Textron as a company, just explain what part of the industry do they mostly affect?
Yeah. So Textron is predominantly in the lower end, not quality wise, but size wise,
Yeah.
of commercial of aviation. They make a lot of aircraft for FedEx, but
Okay.
those are turboprop aircraft. Those are not airliner jets.
Yeah.
They also make private jets, and they actually make trainer aircraft like the Cessna 182. Okay. That's
Wow.
Textron.
Yeah.
And they have other businesses. That's not their only business. Okay.
Yeah.
But thank you for asking that. So Textron is facing labor problems. They will get it resolved, and they are having the same problem that the ports have, and it's not unique to Textron. All right, let's move to Boeing.
Yeah.
And Lee, the issues at Boeing, I mean, we all know Boeing's got a lot of problems, right? They just filed an S1, or whatever it was called. I think it was an S1 at the SEC yesterday. They're trying to raise $25 billion of equity. Okay. Why? Because if they don't, their credit rating's going to drop. And
Right.
that's a cycle. That's a dangerous cycle. So not that it'll lead to bankruptcy a day later, but it could lead towards that someday if they don't raise equity capital. And if you'd asked me 20 years ago if Boeing would be in this position, I would say that's impossible.
Right.
So what's going on with the strike? Well, like we just talked about, right? Labor has not gotten a raise. There's been inflation. Labor needs a raise. Now, there's also a labor shortage. Okay. At the same time, there's a labor shortage, especially of the expression that at the conference I was talking with folks yesterday in the supply chain. The gray hairs are all gone. You walk on a manufacturing floor today, and the gray hairs are gone. Literally, it's maybe not the smartest way to say it, but it's true.
Yeah.
That machinist, that foreman, that worker, actually who made the airplane, the senior people that knew how to do it for 20 years, literally in the great whatever we want to call it of the pandemic. There's lots of different names people throw around, but too many great people left. What's that?
Yeah, I was going to say catastrophe of the pandemic, but it's
exactly. Yeah. But too many great people left, and so there's a labor shortage, especially of talent. Right?
Yeah.
You could argue that the door plug that blew off on the Alaska aircraft was because the talented labor wasn't overseeing what was going on. Right. You really can make that argument.
Yeah. So
in light of this, Boeing decides it's not going to negotiate anymore, and it's going to lay off 17,000 workers. I mean, I was with some colleagues yesterday, and we're beside ourselves. How could you think that's an intelligent strategic maneuver? We're short labor. You're short talented labor. You're probably going to lay off the most expensive people first.
Yeah.
I mean, I don't want to bash Boeing for the entire podcast, but that's not the right thing for Boeing to have just done.
No, I mean, you can see that can only exacerbate the problem potentially.
It's not going to fix it, Lee.
Certainly not. So we're not here to talk bash Boeing, but we are here to talk about, well, what does that mean for not just Boeing, but for the industry itself, and obviously in particular through the lens of M&A in the industry. So what are the implications of what you've just described, Bill?
Yeah. So, and we had this conversation with some of our clients in the past 36 hours. In this bad news, there's some good news. So let me do the bad news part because we got to get it done. And then let's talk about the good news because it's more fun to talk about. Okay.
Yeah, sure.
The bad news is that if you are a supplier to Boeing or to a Boeing supplier for the production of aircraft, it's a tough time for you, period, full stop. Okay. Because they're not making airplanes. And when they do start making airplanes, it's going to be a slow ramp up, et cetera, et cetera. Okay. And there's going to be a big hangover from this strike. It's just going to take a long time to get the system moving again, et cetera. Okay. Yeah. That's the bad news. We're done. Now, there's also bad news on the Airbus side, by the way. They're not producing aircraft like they wanted to or hoped to. So if you're in the Airbus supply chain, things are a lot better than Boeing. But there's still some friction there. They're not hitting the numbers they wanted. They're telling you to ramp up, get your capacity up, get your throughput up, but yet they're not pulling it through yet. Well, that's not good for your income statement. Okay. Yeah. So it's not just Boeing that is an issue. But let's talk about now the good news, because there really is some wonderful news in this bad news.
Okay, go for it.
The good news is that if you're in the aftermarket,
Yeah.
this is the best market that I've seen in my life. And I got no hair on my head, Lee. I'm old.
Yeah.
I've been doing this since the early 1990s. Okay. Seriously, I started my career at GE in 1991. Okay. I've never seen this amount of demand from the aftermarket in my entire career.
Yeah.
And it's not, again, this is not a rocket science statement. I'm not the smartest guy ever to be on your podcast. If airlines can't get new aircraft and passenger demand is strong, they have to keep their older aircraft flying.
Yeah.
Right. I'm smart, but I'm not the smartest guy you've ever met. Right.
Yeah.
But that's just common sense. And so what's going on in the aftermarket? Well, HEICO, which I'm sure you're all of your audience know HEICO, but just in case there's someone new to the industry, HEICO is one of the oldest, greatest companies that focuses on the aftermarket in our industry, right? Their stock price in 3 years is up 68%. Okay. And it's a multi-billion-dollar business. It's not a venture capital startup. It's a multi-billion-dollar business. Most multi-billion-dollar businesses, their stock price doesn't go up 68% in 36 months. Okay. And if you look at Loar, which is got a little bit of exposure in the OEM to the OEMs, but Loar is trading at 61 times EBITDA.
Okay.
I mean, that's just huge.
Yeah.
Huge.
Yeah. So for them, it's good news potentially. So what are they going to do? Does that mean they're in the market to consolidate, to bring in new capacity? I mean, this is the thing. There's all that demand out there, which the industry is struggling to actually meet the demand that's there. That's a good problem to have, I guess.
Right.
You'd rather have it that way than the other way around. So what does that? What are we going to see? Do you think, in practical terms, given the situation that you've just described?
So from the airline perspective or from the M&A perspective?
From the M&A perspective, yeah. Let's go stick to M&A. Yeah.
From the M&A perspective.
Yeah.
So from the M&A perspective, so I'm going to step back for a second to answer your question about what we see in the M&A. I'm stepping back for a second to say that most of our clients, because of the niche we play in, most of our clients are looking to sell their business because of the cycle of life. Right? Most are founders. Maybe they bought the company themselves or rose up within it, but they own and control a middle market company. Typically, our market is under $200 million US in revenue. Wow. So with lower middle market companies, and that founder or small group of owners is at a life cycle place where they want to sell and retire. Okay, I mean, it's really not uncommon that we would sell a company and the owner goes to Florida. I mean, literally, you know, a portion of our clients sell their companies and move to Florida. Okay.
Yeah.
Not all of them, obviously, but literally it's life cycle. So if more than half of our clients are selling their companies because they've been doing this for 40 years, there's no kids in the business and it's time to sell, they are somewhat agnostic to the market. Okay. They clearly want to get a good price. And if we're in a recession, they'll wait.
Yeah.
Okay. So does this change our volume and the activity we're seeing? Well, of course it does. It's a great time to sell, right? If you're in the aftermarket, because valuations are high and companies do want to make acquisitions like Loar and HEICO because they need people, they need capacity, and it's good for them and their customers if they can have more capacity and more capabilities. Okay. Yeah. So for that fact, yes, now is a good time. Multiples are clearly up, right?
What are we talking multiples?
What are multiples right now?
Yeah.
Okay. So go ahead. I'll tell you they're up about, give or take, from the period you want to start from, they're up about 15%. Okay. Which, like, if the multiple was 10 times, it's now 11.5. That's good. Okay. Yep. But it's not crazy. It's good, right? Yeah. Why? Because the market's rational and the market knows that this will not last.
Okay.
Right. Yeah. Boeing will eventually make airplanes. Airbus will make more. Demand will cool. There'll be a recession at some point in our lifetime, right? And so this perfection of market that enables the aftermarket to be so profitable, it's not going to go away, but it's going to calm down.
Yeah. So is this market you describe, is this encouraging these guys in their life cycle? Is it encouraging to think now's the time? I would have done it maybe in 3 or 4 years' time, but actually, if we don't do it now, we're going to miss that.
That's too far out. having
Yeah.
done this for
Okay.
23 years, the owner that's 57
Yeah.
that wants to sell at 61, no. The market's good, but it'll be good in 3 or 4 or 5 years, and I can wait 6 years. If they're having fun, literally, this is the conversation we have. Not
Yeah.
having too much fun, Bill. I know the market's good, but I love what I do, and call me in 4 years.
Okay.
And so now, if they were thinking the next year or two, absolutely, now's a good time. It takes a year to sell, anyways. Let's
Yeah.
go ahead and do it, Bill. But that is really what we've seen over 23 years, Lee, and that's what we're seeing right now. Is if you were near the window of, yeah, I was going to sell in 2 years. Yes, they're calling us,
Yeah.
absolutely.
Yeah.
But if it's 5 years out, they literally, no, I'm not ready.
In terms on the buyer side, you mentioned, the Heikos as well are looking because they need to, or it's a good time to consolidate potentially.
Yes.
Is this market also attracting outside investors? There are VCs swirling around because they see there's a good 5-year window here to invest now, make some money, and get out.
Yes. It's a great question, Lee. And I'm going to separate venture capital from private equity. And I'll just
Right.
explain that for your audience that may not be aware of those terms, or they
Yeah.
may be different on your side of the Atlantic. Venture capital are people that in institutions, or they can be high net worth individuals, they invest in risky, high growth opportunities. That's VC. Private equity, it's almost the same thing, but they're looking for more modest returns and
Yeah.
lower risk. Okay. Usually more
Yeah.
mature companies.
Yeah.
What's interesting is we're not seeing a change in VC activity in commercial aviation. The few that were playing before are still playing. We don't see a lot of new entrants on commercial. Ironically, and it's not really your market, so I'll just say it quickly and anecdotally. At the AUSA and in the defense market, we're seeing an enormous inflow of venture capital. And I'm going to segue here, and it includes AI. And
Okay.
we are seeing VC AI coming into the defense market.
Yeah, interesting. We AI is something we're going to talk about. I was thinking exactly that when you were saying, so your VCs are wanting that high growth, uh, high risk to a degree, but certainly high. That's what they want. They want high growth, right? The private equity guys a bit more. We would think more into this area we talked about in terms of the commercial supply chain. AI, however, does maybe change that dial. So, and AI is one thing we wanted to talk about because Bruce, your colleague, did do a piece for us on AI a few months back, and
Yes.
and looked at what the impact of AI is having in M&A in commercial airline industry.
Yeah.
He makes the point that being a quite conservative industry that doesn't take risks, we're bringing in AI in a sort of incremental, slowish way. I
Yes.
suspect in some areas that's going to speed up as AI proves itself.
Yes.
But again, it's another thing that I think he pointed out as being potentially a positive for the M&A sector in the commercial aviation space. So explain
Yes.
why you think ultimately AI is a potential positive.
Yeah, and Bruce, I think Bruce's piece was perfect. I mean, Bruce has been with me for 23 years, so I think Bruce
Yeah.
is perfect. But I do think every now and then I don't. But Bruce is really smart, and that was a great article. I mean,
Yeah.
everything he wrote, I really stood right beside him.
Yeah.
What we see is this, and I'm a commercial pilot, and Bruce used to, at one point in his career, was in the supply chain for our defense industry for nuclear things. Okay, so Bruce has a very conservative view of things because of his background, and so do I. Aerospace and defense, especially commercial aviation, does not have tolerance for risk because lives are at stake, right? That's
Sure.
obvious. So what we're seeing, and the work that Bruce did on this was, I thought, spot on. AI is already in the commercial aviation industry. Well, where is it? Well, designing new wings, right? Throwing things in the wind tunnel and seeing what they do, and processing all of that incredible amount of data of the airflow in the engine, right? And
Yeah.
so even I fly a Cirrus, right, which is a nice airplane, but it's a piston powered GA aircraft. I've got data coming off that. I download data and I send it to a service, and they're processing my engine data against millions of data points of other engines, and they send me a report saying cylinder number 4 may have a sticky valve. Okay, that is AI. I mean, it really
Yeah.
is. Okay, because you can't process that much data on Excel, right? I mean, you need a generative AI to some degree. And so what Bruce wrote about and what we're seeing is across the industry, and it's not today, it started a while ago. Any computing power that we can use to make airplanes more fuel efficient, to have their weight and balance be more accurate. Anything we can do analytically, we're already using it, and AI is coming into the system. Also, production. If we can run AI to figure out, well, if you put that rivet here instead of there, it would be faster and cheaper. So on the production floor, AI is already coming in. Okay. Where we don't see AI coming in is in the cockpit, right? We just don't see it. Now, do we see faster compute? Yes, but we don't think we're going to have self-driving airplanes in the next 2 years, right? We just don't see it.
I've seen applications of it. Going back to the lack of grey hairs in the engineering side of things, is that AI can help you with that because it can give a less experienced engineer almost the wisdom of every engineer that ever existed as they're doing the work, and they put goggles on, and the goggles take them through the process that they've got to go through. So I can see AI is being adopted. We know in that area. I was at the World Aviation Festival recently in Amsterdam, and a lot of talk there is about how airlines retail and how they make more money out of their activities, which I think is a big issue for airlines, because they only make, I think Willie Walsh was saying, 30 billion net profit a year this year for the entire airline industry. It's only it's a 3% margin. It's
very thin,
not fantastic for such a risky business. So they've got to find ways of making more out of the demand they create, because airlines create demand in all sorts of places, and the big OTAs are worth 10 times what the airline industry is worth. So AI is being adopted there, and that's the less risky part of the business. So you can see that potentially having a big impact there, can't you?
Of course, because that's not safety in flight. I mean, Lee,
it's not operational.
I remember so many different avenues the airlines tried on revenue sources. I'm old enough to remember when you sat in your seat, you got a magazine that you could shop before online shopping, right? And you could sit in your seat and you could go shopping, and you could circle the thing and fill out the thing, and you could buy stuff while you sat in your seat. I mean, the airlines have tried everything, right? But I agree with you. AI can better match supply and demand, and do things that the human brain can't do on its own, and Excel can't do for you, right? So Bruce is right. AI will come to every place possible. Airlines are no different than shopping malls or retailers or whatever. It will come in. But the issue is that when it comes to safety of flight, we think that AI will come into this industry last, when it can touch and impact the safety of that aircraft. So the autonomous car is happening, right? There will be autonomous aircraft starting maybe in 5 years for a FedEx delivery of a Caravan, which is one of the smallest aircraft. Could we see a remote area where that's a pilotless aircraft in the next X years? Yes. But do I think you and I are going to get on a BA flight and cross the Atlantic with no crew in the front of the airplane? Not in our lifetime, Lee.
No. Well, it is already having an impact. There's a risk with these tech buzzwords that the hype is greater than the reality, and everyone wants to talk about AI because a few years back it was probably, I don't know, blockchain or data or big data. Big data was big, wasn't it? And as soon as you thrash out these words, then suddenly the share price goes up. There's a danger that this is a game that is being played to hype up things. But there is some reality to this now, and deals are being done based around people's proficiency in AI. You are seeing that.
So what I would say is in the markets we live, I would say adopting AI on the manufacturing floor, right? Getting your machines to go lights out and produce at night while your staff is sleeping. That is happening, and it was happening before. And if a buyer walks on your shop floor and sees a bunch of what we used to call Bridgeport lathes, okay, it's all manual. They're not buying your company because your future is not bright, okay? But you don't need AI on your CNC machines for you to be modern generation production, okay? It's just the next level of productivity, right? What we're seeing more so is cyber defense, actually. And so, Lee, the issue of AI is it's coming, it's important, and you should, as a supplier, be aware of it and use it reasonably to help you make more money.
Yeah.
Right? You shouldn't put in AI because you're going to sell your company and you think buyers are going to pay more for it because you bought an AI system. You should use it to make more money, which it should be able to do for you.
Yeah.
Okay.
I've,
But buyers, good.
Yeah, I've just on that. I was just seeing some figures earlier today, talking to somebody, and they had the figures for average revenue per passenger that the airline industry makes, commercial airlines, and it's not changed over decades. It's stayed about it's around about $5 or $7, something ridiculously low like that. You make more selling coffees in Starbucks per customer. So that is the big promise of AI. It's the first tech innovation that can come along and really tweak the dial on that, so that airlines are making more money, and that's got to be the ultimately the test, isn't it? Because it's going to cost a lot to it. It's going to cost a lot to develop and implement as well. So
yes, but the key is right. The cost to implement hopefully is less than the revenue benefit, and therefore you make more money.
That's the idea. Yeah.
But what we're seeing is while there is interest in AI in the middle market, it's not the driver of buyer due diligence right now. What we're seeing on buyer due diligence is cyber defense.
Okay.
Obviously, it's a huge deal in the defense industry, but we are seeing every buyer on every deal we do right now. They want to see what firewalls you have, what's your cyber defense, and they don't ask, have you ever had an attack? You know what they ask? When was your last one, and how did you defend it?
Yeah. Okay. Interesting. Time is nearly running out, but what we said we'd finish on is you've already painted quite a positive picture, actually. But we thought we'd end on a few just general idea thoughts on M&A activity in the space. You've obviously said explain why you think it's a almost like an unprecedented period.
Yes.
But just let's end on a few generic thoughts on where you think we are at the minute, and what do you expect to see? What are the key trends you expect to see in the next months and years?
So I actually think things are going to pause down. Remember, we're U.S. centric.
Yeah.
So this is a U.S. comment. I think in the U.S., well, we are seeing a slowdown starting about 3 weeks ago with our pipeline development, with people saying, hey, Bill, maybe in 3 months we want to sell. Our pipeline slowed down about 3 weeks ago. Now, we've had the best year we've had in a very long time for the reasons that I just talked about. Okay?
Yeah.
But the last 3 weeks, I've noticed anecdotally things are slowing. And when I've asked folks, why do you think that is, or why did you decide not to call me in the cases where I have friends that I can do that with? The answer is the election creates too much uncertainty. Okay. Now, I was with some very smart analysts in the past 2 weeks, and most analysts believe that whether Harris wins the election or Trump wins the election, it should have very little impact on aerospace and defense. Okay?
Yeah.
There's some arguments as to why that may be a little flawed, but most analysts believe that. Impact other things in a big way, but A&D, not a big impact. And so if that's the case, then why is that the behavior? And the behavior is because it's such a high profile election, if I can use that word. Yeah. Okay. Everybody's focused on it. Voter turnout, they say, is going to be enormous. I think just the owner founder is like, just let this thing calm down and let's do it next year. And so I think that's where we are. I think for the next whatever weeks we are until December 31st, I think the M&A activity will actually slow down, but I think it will very rapidly accelerate in the first quarter.
So business hates uncertainty, and that's what the election is injecting into the US sector is at the minute, and so just the pause, just to wait and see.
I think that's right. I really do think that's what's happening. Does
that what you have a little bit of an insight what happens on this side of the pond?
Yep.
Does that then impact over here because we work in a global industry and no one operates as an island?
So I'm not a political analyst, right? I'm not.
No.
But the aerospace and defense industry is a geopolitical talking point, more than that in some cases, right? On the defense side, it is geopolitical, right? AUKUS and other things we're doing with the Brits and the Australians regarding the China Sea. I mean, that's real stuff, right? And we're building submarines together, right? And so that's true linkage. On the commercial side, there's less true linkage, but there are relationships.
Yeah.
And so what I see from the election is if if Trump wins the election, he has said that he is more focused on the United States than our international relationships. I'm not saying that's good or bad. I'm just saying that's what he has said. And Harris has said that she's more focused on our international relationships. So if that's the case, then I could make an argument that a Trump election would be cause friction for suppliers in the U.S. to the Airbus ecosystem.
Yeah.
I don't think it would be huge, but I do think it's possible that a Harris win would make the supply chain in the U.S. happier as relates to their relationship with Airbus. But Lee, I don't think that's a huge move. I think that's a small move.
Yeah, yeah. Who knows? There's a lot of talk of the impact of tariffs and all that stuff. But this will work itself out. I wish you all the best over there for the next few weeks. You've not got long left.
But Lee, this is the reason why there's a pause on M&A, because
Yeah.
we could have this conversation about what if Harris, what if Trump. We could have this conversation for 3 hours, and not that I want to, but we could, right?
Yeah.
And so that is why there's a pause on M&A. There is so much uncertainty about the differences. I think that the rational owner says, just let me get through the election and then we'll do this.
Yeah, yeah. Look, we haven't got 3 hours. In fact, we've run out of time entirely. So we have to draw this one to a close. Bill, thanks for joining us. Really appreciate it. It's obviously you're a busy guy at the event with all those people to go and see. So I'll let you get off and do the networking.
Thank you, Lee, very much.
Yeah, no, pleasure to speak to you. Thanks very much. And we'll no doubt do this again at some point in the near future. Thanks a lot. We'll catch up soon.